Thanks for having me, guys. Appreciate it.
Can we call
very
you
much.
Flash Gordon instead of Todd Gordon?
Whatever you want, man. Whatever makes you happy. That'd be cool.
Well, Straza, I'm pretty excited about today's guest on the Off the Charts podcast. But before I even introduce him, like Straza, you and me just need to talk about our envy that we have in the backyard that he's got. I mean, do you see that backyard? I mean, this is where he works.
Yeah, you show off. Look at this yard game behind him.
I know. All right.
There.
Listen, guys, this is Todd Gordon. If you didn't know, this is Todd Gordon, the famous Todd Gordon, Flash Gordon, if you're cool. Todd, thanks for being here, man. How you doing, buddy?
I'm good. Thanks for having me. And hold on, coming from Key West in Colorado, like we're in upstate New York, man. I mean, like you guys got it over on the location. Let's be clear right there.
Hey, I'm from Western New York, so I know what you're talking about. Upstate New York. Upstate New York's beautiful, man. Don't poo-poo it. It's a great place.
It's good. It's good. It's fun. We're in Saratoga, which is super fun. Big horse town. We're getting to Belmont next month. So I don't know if you guys follow horse racing at all.
Not at all.
No, but that's
okay. All right.
That's one of the.
So the winner of the Kentucky Derby was this horse called Mystic Dan, and then they just ran the Preakness, which if he won again, then he'd be on the watch for the Triple Crown, which is like one of the most coveted spots. So the Belmont is now temporarily in Saratoga. So if we had a possible running of the Triple Crown, this town goes bonkers as it is for summer horse racing season. If it was a Triple Crown, this place would have been just lit, but didn't win on the Preakness.
Are you going to go? Because I feel like that would be a cool sporting event to check out.
It's so much fun. I mean, it's the biggest party. It's like a Jimmy Buffett concert parking lot, but people are dressed up and wearing nice clothes for the track.
Oh man, I've been to a fair share of Jimmy Buffett concerts in my day, so you're speaking my language there. I like it.
Me too, bro. Me too. That was a hat tip to Strazi and Key West, but I've been to probably about 12 or 15 Buffett shows.
I went to my first one last year, which was his last one in Key
Oh,
West.
you told me that. Oh, that's unbelievable.
Wait, was that his last show ever?
No, last Key West tour.
Nice.
Did you saw him in Key West?
Yes, it's a blast.
Oh, that's special.
It was cool.
I've seen him a number of times, maybe not 12, but I think the last time I saw him was at Wrigley Field. He played 2 shows back to back at Wrigley Field, and that was fun.
I have the recording. Like he put it on CD or DVD or whatever. I have that recording.
I was there. Yeah. I was there. I think that's the last time I saw him. Yeah.
That's awesome.
All right.
Yeah, he's good.
So Todd, you're pretty well known out there. You're not an unfamiliar face to a lot of, at least people that watch me and Straza. Like people know who you are. But for those who are uninitiated, let's go back. Yeah. I want to talk about, what were you doing before the stock market was even a thing for you? Like where were you having fun? What were you doing? Were you doing different work before? What's up?
Yeah, no, thanks again. Thanks for having me, guys. I'm a big fan. I've known you guys a long time, and we're competitors, but more so friends. So thanks for having me. Sean, the stock market's always been. I'm lucky in that regard. I always knew what I wanted to do. Like there was never a question. I started. I think my mom gave me her allocations and her retirement plan. It's like 15, 16, pick mutual funds. Started getting interested. I think I somehow forged my E-Trade application. I think it was like I threw a couple $1,000 that I made at the country club in day trading stocks on like E-Trade, which we didn't know it at the time. That was in Queensbury, which is a little north of here. It wound up being a long distance phone call and AOL dial-up. So we got the bill at like the end of the month and it was, I don't know, a couple $1,000 because I was on long distance call day trading at like 17 or 18 years old. So that's
quite a commission.
Yeah, I know. My whole account was probably $2,000. The phone bill was more. So I just knew I wanted to do it. I went to school. I was trading stock and options out of my dorm room, focused on like ski racing, social life in college. I did fine in school, was more focused on the markets. And then right out of school, I went to San Diego and got my first job prop trading at 22 and been doing it ever since.
Would you say you had took a traditional path to what you're doing today then? Business school, Wall Street job?
Well, I don't know. I mean, we're all entrepreneurs, right? The three of us. I mean, is there anything traditional about what we're doing? So I'm not sure how to answer that. I had a stint on, I worked on Wall Street for 6 years. It was a new age upstart foreign exchange trading company, which, I'm old now. I mean, that's like the equivalent is the crypto. I'm sure the fun that was being had and the money that was being made in the crypto offices. But I traded for the parent company was a hedge fund. I was writing the research report that went out around the world, and I would just trade the one idea in the hedge fund. So I did institutional for a while, but I always knew I wanted to be, on my own. I was early on Twitter, and long story. Then CNBC came in, parted ways with my company on really favorable, great terms, and went out on my own in like 2010.
You have something in common with another very successful trader, Ken Griffin. You both started trading options in your dorm rooms. So, hey, worked out a little better for him, I think, but you're doing all right.
Ken Griffin, yeah, Citadel, here I come.
So in college, you skied? You were collegiate athlete?
I was a Division I ski racer in college, and super fun. I grew up, literally at the mountain where I'm from. Was there every day, and struggled to make the top five race. Only the top five travel. The number one guy was, got eighth in the Olympics, married to Lindsey Vonn. So I was racing against some guys who were far more talented than I was. Most of those guys went into the ski industry. I went the other way, and I said I knew I wanted to trade, and that was it. A lot of similarities, I think, between ski racing, which is a very individual sport. A lot of pressure in 30 seconds, 45 seconds a minute, going anywhere from 30 to 60 to 80 miles an hour. But there's hours and days and a lot of prep that go into that. So I found a lot of analogies between that.
I feel like the individual sports, you can draw far more similarities to what we do.
Unfortunately, I agree. I wasn't a great team athlete. Now I coach a bunch of baseball. But, I mean, were you guys team sports guys at all?
I was. Yep.
What did you guys play? I should know this. What were you guys?
Played basketball and lacrosse.
You were, okay.
Ooh, I didn't know about the lacrosse part of you there, Straza. That's good. Oh, you're Connecticut, of course. Of course you played lacrosse.
You're kidding. Oh, yeah.
I played ice hockey and volleyball. Those are my team sports. I mean, I played all the Little League, right? I played Little League baseball and Little League soccer, and I did all that stuff. But like organized, like serious stuff, it was I played on my varsity high school volleyball team, and then my varsity ice hockey team as well.
That's cool. Yeah.
The good part about the individual sports, though, is like even with skiing, like you said, you skied with all these guys who are better than you, and you maybe didn't even make the top five or the cut. You learn how to lose in all sports, but in individual sports, you learn how to lose alone. And that's how you
lose alone.
As a trainer.
You have no one else to blame.
Yes.
In I'm just trying to think with other individual sports like tennis, the conditions are fairly the same, maybe a little bit of weather, but skiing, man, there's so many variables that this is one of the biggest things that I took away from so many variables there's such different snow conditions from one race to the next, different terrain, different sun placement, like the course setters. There's so many different things that can throw you off. You learn that you cannot waste energy and get upset about things that you can't control. You have to be very good at controlling everything and focusing on everything that you have control over. And I think that's like the emotional intelligence, EQ versus IQ. There's so many things that can just piss you off and throw you off the game. But if you want to be competitive that day, which it's settled by hundredths of a second, you got to get that out of your mind. You got to focus on what you have control over. And I think that's really powerful in trading.
So being in a sport that's an individual sport like that, I imagine individual coaching, working with coaches actually takes on a lot more importance than a team sport. How would you rate yourself as being coachable? Did you think that you were great with coaches, or did you like, hey, I got this, leave me alone? Like, how were you?
That's interesting. If I'm the kind of guy, like if I'm really interested in something, I go full on. I mean, ADHD, documented, no problem. I mean, I hyper focus on what I want to do, But if I don't agree or it's kind of not piquing my interest, then it's not going to get any attention. So I was lucky enough to work with the coaches. I used to live with them, and they used to. You ever see Rocky IV where they're out there beating him on top of the Russian mountain? You remember when he's climbing up the top?
Yep.
I literally had coaches that did that to me up in Lake Placid in upstate New York, like under the ski jumps. Like I felt like I was Rocky for super, I respected him very much, but I think that's probably why I'm a better trader and investor than I am a business owner, because I'm just really focused on what I want to do. And hopefully the people that work for me will pick up the pieces around me. So interesting question, Sean.
Well, let's translate sports to trading for a second. When you were in sports, you had these coaches. They were readily available. You probably had more coaches than you wanted from time to time. Now, when you're in trading, you got to seek out your own coaches or you're not going to get any coaching, right? I mean, how, was that a difficult transition for you?
Yeah, how did you learn?
That's what I love about trading, guys. I mean, there's so many different ways to do it, right? I don't know how. You've got to find a coach that you really relate to, that you trust, you have the similar mentality. And there's so many different ways to do this. It's awesome. So I guess for me, I gravitated towards the kind of analysts and the kind of guys who were already doing it. That made a lot of sense to me. And I just like full one-track mind, consumed everything I could with it. And it's my trading and investing arsenal now. And, I think that's a great thing for the retail or the guys who are coming in, even in some institutions. Like there's so many of us to choose from because there's such low barrier to entry in this business. But if you find someone that you really gel with and you have a similar outlook, it can be a really rewarding relationship.
So how did you learn your craft?
So my first book I ever read in college was Alexander Elder's. I don't know if you remember this red one, Trading for a Living.
So good, man. One of my
great book. I first learned about indicators and how to draw a trend line, and it was so good.
But correct me if I'm wrong, Todd, in that book too, he spends a lot of time just talking about like this stuff we don't think about, like having a quiet room or an office and the importance of that and journaling and stuff like that, doesn't he? You're jogging my memory, because I mean this was literally 20 something years ago. I haven't looked at it since. I need to go back and revisit it, but that is ringing a bell. I do remember that. And he wrote a book called Coming Into My Trading Room too, right? Mm-hmm. And that must be sort of the path he's going down. Yeah, I haven't read that one. I gotta check that out. I love that book also. Anyway.
Yeah, that was good. So that was my first one, and I was day trading on AOL dial-up. I was following this guy, Tokyo Joe. I don't know if that rings a bell.
Unlike Twitter or YouTube, where did you find?
He literally just had a chat room, and we'd pay him, and he'd like run up these cheap NASDAQ stocks. He'd be like, buy. We'd all buy. And then, of course, we found out later he was selling into us, and then he got taken away by the SEC. So I was like, wow, this is really cool. So then I learned.
When people say today, like, markets are rigged, these are the experiences that traders have had coming up.
Yeah.
So when people say markets are rigged, you're just like, yeah, hell yeah, they're rigged, right?
For sure. Well, I mean, but there's not like people who have all the answers. I mean, there's guys who are going to try to manipulate, and they're going to try to do what they can to have their way with the market. Sometimes it'll work and sometimes it won't. Yeah. But so yeah, that was my real early. And then I just knew I was just hyper focused on trading. I had family in San Diego. I just spent a bunch of time in upstate New York freezing my ass off. Like the other thing, guys, like when you ski race, like I know you guys are warm, you're playing hockey and volleyball, I can't even imagine, but we're in like skin tight suits at the top of Lake Placid and it's like 10 below zero. That'll toughen you up. But so San Diego, I got a job prop trading equities, and we would listen to the S&P pit. So a guy named Ben Lichtenstein, who you guys may have come across.
Oh yeah.
Yeah. So he'd be calling the action on the S&P floor, like Merrill's half bid, Goldman takes him at 1, paper to buy. Sean, this is all right up your alley. And we'd be listening to the noise in the pit, and we'd be seeing if there's institutions or if it's locals just swapping around. And then we trade listed stocks, like we trade Home Depot and IBM and I forgot what else, like because we'd be watching the specialists where he put his market. And if the S&P futures went bid over the next 2 minutes with institutional paper and there was loud noise in the crowd, like we get in there, we take as much as we can from the specialist on the offer. Usually back then he'd shut his market down for like 30 seconds and then make you a new market 50 cents up, and you just give him the stock and usually print you up on the offer. So like it was cool in that, like, I learned on a short-term basis, the idea of identifying market leadership. And when you have an edge, like, this is like, it's people wanting to trade the futures. Like, I just don't get that. Futures, S&P futures, NASDAQ futures, like, they're what's, kind of leading the market around, and you want to find the stocks that are getting a clue or a cue or direction from them, but trade the stronger stocks that may outperform. I'm jumping time frames, but back in the day trading days, it was really cool just to identify short-term market leadership, understand the nature of your position compared to the leader. And now I know you guys and I mean, we look at market leadership on a much bigger scale between the 5 major asset classes, if you want to consider crypto. And I mean, there's times it works, at times it doesn't. But the idea of identifying leadership, rotation, and then trading the names in groups that are following neatly behind or showing more relative strength, like, I think that's one of the most important lessons in markets.
So you learned about relative strength at a young age.
I guess it's just relative strength. Exactly.
Yeah.
Yep. I haven't really thought about it like that, Straz. I haven't thought about that. It's a good point.
Straza, we need to do a public service announcement here real quick, because Todd just mentioned a moment ago, Ben Lichtenstein.
Yeah.
I don't know if he does it anymore, but he used to, like you said, he used to run that S&P squawk pit, the pit squawk. And Straz, I don't think you were trading in 2010. Were you trading in 2010?
No, I was graduating college.
All right, so you might have missed this, but Todd probably knows what I'm talking about. During the flash crash of 2010.
Oh my God, dude, the best video. Don't turn off this video right now. Listen to us to the when you're done. Go listen to Ben. I'm sorry to interrupt, Sean. It's freaking awesome.
It's the best.
The best.
Just go Google 2010 flash crash squawk and you'll find it. It's like a 15-minute long audio of this guy narrating the flash crash as it's happening.
Such a good point.
It's unbelievable.
Like, he gets when the S&P futures are trading back then, they were 2,500. It's like 25.20, quarter by a half. They're 25, quarter tick wide. If it gets really busy, they're a half tick wide, or so 3/4 of a point wide. They were like 5 and 10 points wide. He's like, there's no bids, they're 10 wide. Like, I thought
the guy was going to keel over in the pit. I mean, he was going absolutely crazy. Oh, you'll get goosebumps listening to this whole thing. It's amazing.
He was and did you listen to him? I saw this is probably not useful to most people. Did you ever listen to him? Did you ever use his service? I mean, you were in the pit, so probably not, but did you ever hear?
I never used it. No, I was aware of it, but I never used it myself.
Dude, he would get on for like 5 minutes. He should have his own TV show, and he would say the funniest shit to you. He'd be like, if you get caught, give me a call. I'll do my best to get you out, blah, 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 blah. Like, he was the funniest guy. And then TD picked him up and put him on air, and then I don't know what happened with the Schwab deal, but I was on the floor, and I met him, and I knew a couple locals in the NASDAQ pit, and I almost went down there, but I knew the floor was fleeting, and it was all going upstairs. But the pits were, man, that was awesome.
So wait. Back up for a second. You traded on the pits. Were you in the pits in Chicago?
No. So what happened was I had my fill of the West Coast. I did. So that was like 2001, 2, and 3. I was prop trading in San Diego. It was a house deal, splitting 50-50. It was capped to a couple thousand shares. I was eating In-N-Out Burger like 5 days a week to
Hey, do you remember
survive.
the name of that? Do you remember the name of that prop firm? I may have crossed paths with you back then, and we didn't even know it.
Yeah, it was SMB. No, FMB. It was like three partners. We were small. We would clear out of Faleron in San Francisco.
Okay, it doesn't sound like the same place, because I traded with a prop firm that had an office in Mission Valley, and there was an In-N-Out Burger right across the street from our office.
Oh, I would go to the one in Pacific Beach.
Okay.
I lived in PB in Mission Beach. But no, I think I know the group you're talking about. So no, I didn't. I had enough. I was in San Diego. I was in LA for a while, and I had enough. And I was driving back home. I stopped in Chicago. This must have been like 2005. And I had a couple buddies who were locals in the NASDAQ pit. And, I went up and said hi to Ben. I'm like, I've been a subscriber forever. And I thought about staying in Chicago, but I was like, I knew the pit was on the way out. So I just kept driving east. And that's why I wound up back in New York.
Right on. Strazzy, do you love how a guy who like grew up skiing and going to really cold places, when he gets his first real job, he does it in Southern California? You like that?
Hey, it makes sense to me.
I had to learn how to surf, boys. I mean, San Diego was pretty sweet. Like markets would close at 1, and we were living in San Diego. We'd either go surfing in La Jolla or we'd go play golf at Torrey Pines. If you're a San Diego resident, it would cost back then $18 to walk on at Torrey Pines. It was ridiculous. It was awesome.
So cool.
It was, but then my roommate was like, my two roommates were both, one's a bar manager, one's a bartender. They'd wake up, or they would come home at 3 or 4 in the morning where I had to get up and go to work. I'm like, this isn't going to work.
Yeah. That sounds good. Todd, are you a morning routine guy?
Yeah, yep, I am. It's weird though. I don't wake up with an alarm. Do you guys set an alarm every morning?
I let the sun wake me up.
Oh, nice. What about you, Sean?
I need the alarm in the wintertime because the time that I want to wake up, it's still dark and I cannot wake up in the dark. I'm terrible with the dark.
Yeah, I'm right with you on that one. I wake up generally about 5:30. I don't really, I'm trying to go to bed early, 9:30, 9:45. I'll wake up at 5:30. I'll never sleep past 6:15. Maybe if we had a late night on a weekend, I'll sleep through that. But I'm up very reliably about 5:30 every morning, and then I go down and do the same thing. I do a live stream every morning for our members and clients, and usually winds up being about. I get yelled at from my marketing team or whatever. It should be 30, 40 minutes, but it winds up going an hour usually. I go through all aspects of the market, positions we have, what happened overnight. So that goes live at 8:45, and I generally put about an hour and a half, hour 45 of prep into that. I wake up, take my supplements or whatever. I just tore my Achilles skiing actually in Breck. So usually I work out, but I'm on the mend from that. And just sit down and, check important emails, just check news, and I'll just start my research process to get ready for that live stream.
And you're doing ultimately the same thing every morning, right?
Yep.
And what does that do for you? Like, how would you say, how does that benefit you in your process?
It's the only way I can keep up. There's so much happening as I'm getting older, as I'm running, more money on the longer term. Technicals are just as, let me say the other way, fundamentals are just as important as technicals. So there's a lot more reading with fundamentals. And we're in such a macro rate driven FX commodity, crypto driven equity market. There's so much you have to keep up on. And I don't know if it's for me. I think you guys probably had the same time frame. I started as shortest time frame, scalping in and out 1 minute to the next. As I'm getting older, my position timeline is getting larger and larger. Yeah. And so I just think the increased reliance on fundamentals maybe is natural, or I don't know, maybe it's my own evolution. I'm not sure. Technicals are forever a part of me, but I think you have to know what is expected by Wall Street analysts, because that's where institutional money flow is going to go, and that's what's going to move markets. And then macro is wild in that it's given multi-billionaire macro hedge fund managers a really hard time. But I still see so much driving. So I'm wandering. I'm off topic on what you originally asked me. No, sorry.
I like this, and I'm with you. I mean, if you're going to be investing for longer time frames, you have to be aware of the fundamentals, right? The fundamentals are going to drive stock prices over the long run. But you mentioned that as you got older, your time frame has expanded. Yep. Is there a reason for that? Do you sleep better at night? Is it just an easier and better life when you have a longer time frame? How did that happen?
I just think it's easier to make money when you're in a really good equity position, that it's a company that has good technical setup, has, all of a sudden beat earnings expectations, up the guidance, margins getting better, EPS going up. I mean, when you start to see the fundamentals start to confirm the technical breakout, I think the best way to make money is to find stocks that are just absolutely gobbling up market share, new idea, ripping on the fundamentals. It just gives you so much more conviction, I think, to trade the technical breakout or buy the pullback to whatever support you want. And then not only that, but add to the position. And rather than get out because, oh, I bought the technical pullback, now let me pitch them out and make 8%. If you understand what's going on with the company and you see the visibility, it doesn't, I don't trade based on what the numbers are. It's based on what the expectation is. And provided analysts are still upping their forecasts, like that's going to bring in more institutional flow. And that gives you confidence to add to the trade. So it's just like, I think the answer is like, I just make more money when you're in really good stock positions rather than short-term slogging it out. And maybe it's my mentality too. And I know guys make a ton of money. Like there was one guy, we used to live in Jersey when I met my wife. I mean, this one guy, I won't say any names, but he's one of the biggest prop traders I know. He worked for Quad Capital, sat next to Peter Borish, who was the guy who worked for Tudor Jones in the Lost Video. He was his economist. Like he was literally a basket case. His wife would slip him Xanax just to come home and his drink, like couldn't handle the lifestyle, but he was a monster trader, just out of his mind. Like, I just don't have the energy for that. Maybe that's the answer. I know there's a ton of guys who make a lot of money doing it. It's just not for me, I guess.
Yeah. You and I, Todd, started trading around the same time. I started in the late 90s and I'm with you, man. It's just, I was a hyper scalper when I started and I did that for 4 or 5 years and then it gets exhausting. And you kind of hinted at a couple things there. When you're a scalper and you're on a very short-term time frame, you're doing the work. And there's nothing wrong with that, but you're doing the work. When you get into a stock position, for example, that starts going and it's something you're going to hold for a long time, now you're letting the stock and the company and the business do the work to make you money, right? Because you're riding a bigger wave.
Well put. And I think, I'm very cautious about saying, oh, it's all anytime someone has a move that goes against them on a short term, it's all algo driven. It's all BS. It's all computer. Like maybe not. I don't know how you would really find out, but any adverse information that's threatening to somebody is going to be viewed as, I want to be defensive of that. But I think you also, if that's the case, you step above that noise that I think has changed the characteristics of how intraday markets trade. And I think you can sidestep that and be above it. And like I said, and participate in good trends. Again, I want to hammer on the futures a little bit. I've seen so many people get chopped up on them. I've sat in a lot of trading offices with guys who are ex-market makers, both on NASDAQ stocks, in the pits, and I don't, tell me if this is you, Sean, and if you went through this and had to undo it, but I think by being a market maker from the old days, you were inherently taught to, sell on the offer and buy in the bid, which on the shortest time frame means you're taught to counter trend trade.
Yeah.
Right. It's I trade with so many ex-market makers who, when they were market takers, they couldn't trade their way out of a paper bag because they're trying to sell every rip and buy every dip. And I thought that was an exhausting way to trade.
Well, the pit traders, you're right. They were conditioned to be selling on the offer when buyers come in and to buy on the bid when sellers come in. And that worked. But the part that doesn't get told is that when they're buying on the bid because they see some big order coming in, when they were in the pit, they knew where that order was coming from. They knew if that was just a customer sell, which they're like, they'll buy that all day. Or if that was Goldman Sachs just, splash in the bid and they're like, oh, I'll just, I'll buy a little bit. I'll trickle into it because they knew. Whereas on the screen, you don't have that information.
Right. It's all about relationships. Chicago, man. I mean, it's all about relationships. It's like, and I think it's just being a good businessman. I mean, guys, like I look at how hard we all work and study the markets. And I hate to say I'm jumping maybe 5 chapters ahead here, but I also see a lot of guys with a lot of assets under management who haven't done 1/15 the work in the markets that we have. Do we have all the answers? No. But have we busted our balls to learn as much as we can about the markets? And not only that, market behavior, but also our behavior, our reaction to the way markets behave when it goes against us. I think once you can only manage money when you know how generally you're going to react when you screw something up and you're off sides on a position. So I think also it's scalable in being a good businessman in that, I know a lot of guys sitting here in this call and several of our colleagues who I think are much better suited to run money than a lot of these people out here who have a couple billion under management have been, I'm sorry, but asset gatherers and salesmen their whole life. I'm sorry to talk badly about other people, but I think it's scalable as well.
Yeah.
How do you find the time to do so much? Like, is time management something that you have to think about a lot? Like, you're running a company, you're also the director of research or strategy of that company. You're doing hits on CNBC, coming on our show.
Yeah, I really, so I'm really trying to run my two businesses side by side. So the research business is really my venue that I watch the markets every day, and I'm looking at positions, I'm looking at stocks, going through companies, going through charts. It's all research that I'm doing for the wealth management business. So I'm duplicating my efforts. Yep. But I'll put short-term trades on, and I've been doing it so long. It's it's not hard to identify them, but I'm really just leveraging the efforts that I put in to service both companies, the research and the wealth management business. So I'm not if I had two separate, unrelated businesses, it's not possible.
But wait, there's more to it though. Like, besides your business, besides your trading, you're also a father of 3. You're coaching baseball. I mean, how do you juggle all that?
I don't know. I mean, listen, guys, I think I don't know. I mean, I'm not doing as much TV anymore. That's kind of slowing down, it might ramp back up. But, I feel pretty good about the positions we're in. I know the market. I work a good 5, 6, 7 hours hard in the morning, and then things ease up in the afternoon. I know the positions. I know where the market is. I know where earnings are. I know where the Fed is. I know the technicals. You don't have to smother the market. And I think coaching baseball right now, I used to have a lot of friends, in Saratoga in the last 3-4 years. They've kind of forgot about me. I need to be a little bit more social. But, working with the kids, my twins are 10, my girl's 5, like, these are really special times that, my friends understand. Like, pretty soon when they're 12, they're going to think I know nothing. I'm an idiot. So I'm trying to take the best amount of time to run 2 good businesses, be a good father. And then, when the kids don't want to have anything to do with us anymore, that's when we'll revisit.
I can tell there's a lot of baseball practice going on in your backyard, because over your left shoulder, I can see that baseball net back there. And I'm very familiar with those things, because I set those up twice a week for my baseball practice that my son has. My son's 9 and I'm assistant coach.
Oh, nice.
Yeah. And I set those things up twice a week, and boy, it's a pain in the ass.
It's dude, baseball is crazy. Do you get super into it, Sean?
I do. I love it. My son's pitching now, and he's one of the best pitchers in the league. He made it to the All-Star game last year as a pitcher. So,
dude, awesome.
Yeah, it's fun.
Is he throwing any, hopefully no junk?
He thinks he is. He's like, oh, watch, I'm going to throw my slider. I'm going to throw my 2-seam. They're all the same pitch, but he thinks they're different. So that's all that matters.
There's something here. And Sean is super into it, Todd. I'll embarrass him. We were in Asia last year, and Sean was upset. You were sad, man. Was that the All-Star game that you were going to miss?
I missed his All-Star game, and I missed the last half of his season.
I don't think I could do it.
Yeah, it was tough. Steve's not kidding. I had some emotional moments, especially when I missed his All-Star game. I was so bummed.
I was a Division I ski racer. I was really good, right? I coached skiing. I get 12 times more fired up about freaking baseball, and I quit after sophomore year in high school. Like, I was so average. I get more fired up about baseball than I do my own sport. Like, baseball drive me crazy. It's so intense, man. It's awesome. Like, my twins, one's a pitcher, one's a catcher. Almost had a home run last night. Like, I just signed them up for All-Stars, Summer All-Stars. Tryouts are Monday. Dude, baseball's life.
I love that the twins, one's a pitcher and one's a catcher. That's perfect.
Oh, that's awesome.
Yep, it's super fun, man. It's awesome.
How old are they, Todd?
The twins are 10 and my daughter's 5.
Yeah, so my boy will be 10 next month, so I'm right there
Nice.
with you. I only have one. You've got 2 of them, but yeah.
It's such a good. If we could freeze this age, man, I would. 10 is awesome.
In fact, my son right now, they're already on summer vacation. I don't think they're on summer vacation where you are, right?
No, I think about 3 more weeks.
Yeah. So in Colorado, school ends the week before Memorial Day, which is great. And so right now, as we're speaking, out this window here, just a little past out there, my boy and 3 of his friends are playing wiffle ball.
That's awesome. That is, dude, it's so good. It's so awesome. It's a great team sport. I don't know. It's so fun, man. Good for you. It's a great time.
So Todd, one thing we haven't really talked about here. Let's go back. Let's bring it back to trading for a sec. We talked about stocks a little bit, but I think you trade a lot more than just stocks, right? I know you and I've talked options before in the past. Do you trade anything? Are you agnostic, or are you focused in any one area right now?
What do you mean, in terms of option strategies, or
just like are you
just markets in general?
Like, will you trade stocks or options or forex or futures, or are you just kind of in one area?
Yeah, I'm really trying to focus in one area. So on the wealth management side, I run all individual equity portfolios. And then on the research business, I run an active stock portfolio, but then I will put in option strategies based on ideas that we see. In fact, I just put a butterfly on for Dell's earnings tonight. I know we're supposed to be evergreen, but we'll see what happens on that.
Dell, Todd.
What's that?
You've been talking about Dell like for a while now. I mean, this one is just so good.
It's crazy. I put a stupid 1.5 standard deviation option fly out at it's risking 1 to make 9. I told people, I was like, we probably have about a 10% chance or 15% chance of making money, but if you're risking 1 to make 9, I don't know.
So we don't have to talk about individual stocks on here, but this is really your process, right? You're looking for the technicals and the fundamentals to come together. Isn't Dell still ridiculously cheap too from valuation metric?
I got to look at the upward revisions on earnings, because they thought SMCI was going to be they're still smaller in terms of market cap. Dell is still trading probably 17, 18 times next year expected earnings. The EPS growth, the earnings growth is crazy. I mean, they still have a little bit of a ball and chain around their neck with the PC component of the business, which, everyone's going mobile, and that's going to change pretty soon. We're not going to need hardware. We're going to be in virtual reality, and everyone's going to have 17 monitors to flip through. So, Dell's good. We'll see. But no, my process real quick is I always start with the macro. I always want to know, we risk on, risk off. What are equities, fixed income, commodities, currencies, and, crypto is in an asset class. Who knows? So we always know what that's doing. And then we have an idea. It's okay, my traded market's always the stock market. How is the S&P being influenced by FX, fixed income, and commodities? And then from there, I go right into the technicals. I'm religious about having the LA wave count on the indexes, and that's going to have, plan A, plan B. What's my outlook? And if I'm wrong, where's my invalidation point? And, quickly course correct and go there. So you have market direction based on the technicals of the indexes, and then we'll go down. I'll do sector rotation. I love the relative rotation graphs to figure out, of the 11 sectors that make up the American economy, who's leading, who's lagging on the time frame you choose to trade. And is that being confirmed by, whatever impact interest rates or the dollar or commodities or cryptos having on the S&P? Identify leadership. Then I go down, and then I'll break it down into industry, sub-industry groups, and I'll scan for relative strength and weakness of the best stocks within the leading sectors, and then obviously sectors, industries, stocks. And then that's when I'll bring the fundamentals in. I'll say, when I find sectors that are leading, what stocks are showing the best technical and fundamental characteristics, and then we'll go in, and then I'll do some analysis on those stocks to figure out, do we want to hold them? Where's validation, where's invalidation? So I do a very top-down approach.
This reminds me, I forgot, I meant to talk to Straza before we went live with you, Todd. I meant to tell Straza I wanted to place a wager on the odds that Todd Gordon would mention Elliott Wave. I totally forgot to do that. Todd, you're the only guy. You're the only person I follow who discusses Elliott Wave, and I'm not saying it's a bad thing, but you're the only guy that I follow who talks about it.
How'd you stumble into that specifically?
I really thought about just going in the closet on. I'm so sick of defending. It's just don't. I'm going to do it, and don't ask, don't tell.
Yeah. Hey, there are some of us technicians, if you get to know them, they feel that way about their process, and they do kind of keep it quiet. I think that's crazy. If it works, talk about it. But
it's just forever a part of me. There was a question how did I find it? How did I come across it?
Yeah.
So when I was prop trading in San Diego, a guy in my office, he was a Dartmouth guy, and he was doing LA Wave. I was like, what the hell is he doing?
Yeah.
And then fast forward when I was working for the FX retail brokerage and the hedge fund. I was writing a research report called Strategy of the Day. This was like 2006, 7, and 8 when the GFC was just getting started. And I had to find a way to write the research report in a way that I could publish it, put the charts together, write it, publish it, get it out to the customers. And it went to like 50 or 60 countries around the world and give those people time to act on that. I can't send out a technical report and be like, buy, euro dollar when the MACD crosses. Like, thanks a lot. That doesn't help. So I had to find a way to look into the future, come up with anticipated areas of resistance or support, which comes about from Elliott and fib analysis. So you can identify generally what the pattern is, that you can figure out where the boundaries of support and resistance are. And you can say, if this area trades, I'm putting a sell stop or sell limit here and then a buy stop above the invalidation. And if that area holds, then I'm going to take profits down at my first fib target. So literally I would have, the first 3 parts of the trade. It's the if then OCO. I could write that out. And I found that because all the technical research we got from the investment banks, there was a couple guys who were doing Elliott Wave. And I was like, these are the only guys who are with some degree of success telling me what the trade is ahead of time so I can act on it ahead of time. And that's when I really started to pursue it. I was like, this is, for me, the one true leading indicator. And of course, is it perfect? No, it's very imperfect, as is all analysis, which is all subjective, I think. Right. But it's pattern recognition. You have validation and invalidation based on fib. It gets pretty wonky in terms of why it may work, but it's really just disciplined pattern recognition with points of confirmation and ruin. And it allows me to play the trade out ahead of time. And you can literally put, if this level trades, buy it, stop below here, first take profit there, trail stop up. So that's how I found it. And that's when I could write it in the research report and give people enough time to act on it. They got we had a lot of success. I traded really well during the downturn, which, Sean, sorry to go on this long answer, but this is the old world and the new world coming together. When the GFC started really hitting, the yen carry trade was really driving it. That the housing market crash exploded volatility around the world. And there were so many global macro managers putting the yen carry trade on, borrowing yen in Japan at nothing, and then investing in Australian bonds at 5% and making that difference. That's the carry trade. Well, when the housing crisis that started in the U.S. started spread around the globe and everything started blowing up, the yen carry trade started unwinding. So what was happening is, as the S&P futures were getting smoked, the yen carry trade, euro yen, dollar yen, Kiwi yen, sterling yen, were going down with it. All of a sudden, I'm like 1 minute trading, looking at the S&P futures overlaid with the yen carry trade. And that was like 07, 08. It was wild. I mean, that was only like for 6 months that lasted, but it was kind of like the old day trading days coming out during the GFC when volatility spiked. So that's how I found Elliott Wave. And it's just always been a part of me. And there's a lot of, there's a prominent guy, I know him really well, who brought Elliott forward, from the 70s and 80s when Tudor Jones made 100 million off of being short based on the Elliott Wave call. Yeah. There's a lot of doom and gloom associated with it, but the last thing I'll say, if you guys want to go here, great. If not, that's fine too. It's one of the most bullish methodologies out there because it tracks human collective progress as measured through our stock market prices. And the better we're doing collectively as a society, the better our output and production is, innovation, and it's measuring our human growth. And that's really what it's, at the biggest level, that's what it does.
Wow. Saying there's a bullish bias.
There's at the biggest degree of trend, the biggest degree of trend is, whatever you believe our origin as species are, when we started transacting commerce, wave ones, maybe the dark ages, wave 2, wave 3, 4, and then wave 5 will be, either AI eats us alive or a comment hits us or whatever the end is. That's the end of wave 5.
Wow. That's pretty cool. Do you find that suits your personality? Just having a bullish bias?
I love trading volatility. So no, I'm flexible enough and I'm impartial enough that I love trading high VIX. I think we've all traded high volatility markets, and as a money manager, I can't wait to show. I mean, I did, knock on wood, pretty well in 21 and 22, managing long-term money during the sell-off. So I'm good either way. But I think I'm generally an optimist. I think there's too many traditional and new age social media influential voices who are trying to scare you into paying attention to them to get their clicks up. Because unfortunately, the message, everything's going to be fine for now. Don't be fearful. It's probably easier to make money by being bullish now, isn't going to get clicks. But the people who are self-serving, who want you to pay attention, they're trying to scare you with the world's coming to an end. And unfortunately, I've seen a lot of accounts miss out on life-changing money in the upside because they got sucked into that, unfortunately, which is very easy to do. But I could go either way, guys. I don't think I'm biased one way or the other.
No, that's interesting because I think a lot of the technicians and even some traders that we've already talked to, Sean, you'd probably agree, they have a bullish bias and they'll tell you, it suits my personality. I'm a jolly guy. I don't like betting against stocks. So that's interesting. I also think going both ways speaks to a versatility that a lot of traders we've talked to have too.
I can see it both ways. I mean, I'm not good enough on the fundamental side or the macro side. I mean, look, we have 4-decade highs in inflation, and rates just broke a downtrend line that has been in existence since Sean and I have been in diapers. Like
70s.
It's like a 1981 high in rates, and we just broke it. Like, I get it. I see it. I can see both sides of the fundamental argument. And, that's where technicals and reading the tape and price action comes in, and watching the rotation and seeing what's actually happening and observing both sides of the argument. Nobody knows the future. I mean, you're dealing on mass human psychology, which is really what drives the Elliott wave patterns.
I'm curious if this.
Yeah.
Sorry, I'm curious if this bias has changed for you because, you mentioned earlier about how, you and I both agreed that when we started trading, we were very short term. And as we've gotten on in age or experience, whatever you want to call it, we've gotten a little bit more longer term in our time frame. I found that when I was a short term trader, I had a bearish bias because as a short term trader, I made most of my money quicker, easier in short term trades. But as my time frames have lengthened, it's gotten harder to make money on the short side, right? If you're looking at a 3 to 4 to 5 week to month trade, man, it's so easy shaking out of short trades.
It's a good point. I mean, again, maybe it's just the function and the way the markets work now. I mean, when it does sell off, it happens really quick, and it's hard to get on board and any follow through in the 3 to 4 week period, right? So, we've been in an uptrend. Since 2008. The 2022 sell off in the Nasdaq was the largest technology correction we've seen since '08. So we've been in a pretty significant bull market, and it hasn't really been any more than 2-3 months of any kind of significant pullback. So I don't know.
Yeah. Maybe it's just recency bias.
I'm not sure how to answer that question. It's interesting what you're saying, though.
Yeah. I just felt like as a short-term trader, the downside moves, like if I was an intraday trader and I'm going to cash every night, which is how I started my career, I felt like the intraday down moves always moved a lot faster and a lot farther than the up moves. And so as traders, I worked in a trading office with 40 other traders, and we all always had our best days on down days.
Yeah.
We could make money on up days, but we all preferred the down days. Like we were like, all right, let's go. Let's do it.
Yeah, absolutely. Yeah. Of course. Markets sell off a lot. Greed is, I think, more of a powerful emotion. Fear is more powerful than greed, for sure. So it's definitely. I like trading high volatility markets. There's definitely more follow through, and fear is a very good component. It's just to sit around and wait for those periods of sustained 20 plus VIX. I think there's a lot of opportunity cost lost on being more patient, sub 20 VIX by being long, slow, per moving markets.
For sure.
But
for sure.
Can you switch? And I think you and I probably have the experience. And I've done it multiple times. I'm sure you guys can. I know you can. Like, just put our old hat back on and hit some bids and be short for a couple of days. For sure. I think I'm just trying to retrade. I'm trying to not trade anymore. I'll throw some option positions on, but I'm really trying to participate in what I think is this next. Just like Jensen Wang just said. Are we in the next industrial revolution? fully believe AR is coming. VR is coming. I mean, the leaps in computing power that we're going to have, just the technology that we're having, this bid that's in semis. I mean, the semiconductors have been bid for so long that the market's pricing in the next way we're going to live. And I think, American innovation is continuing to power us. I think the market is sniffing that out. And I'm not a long only table pounding bull. Like you said, I bring it. I'll trade the short side, but I really believe that there's serious money to be made on the upside. I love what the future may hold for us and the way we're going to interact, personally and professionally.
I love this. I agree. I think we got to get to the juicy stuff, though. I want your best, like, real trader horror story. Like, do you ever blow up an account or have to really learn the hard way? Give us something.
Come on, Todd. We know you got one. Let's go.
We told you we were diving in and we were going to go.
Yeah,
deep.
no. I've never, I blew up my $2,000 or $3,000 E-Trade account, day trading on dial-up.
Bill.
Yeah, it wasn't even just the phone bill. I mean, do you remember, Strauss, you definitely don't. Sean does. Do you remember AOL, plug into the phone modem?
Oh, yeah. Boop, beep, boop, beep, boop, beep, boop.
Beep,
I remember
beep,
that. Yeah.
And then I think it was paying $30 a side to E-Trade to get into my 50 shares. So I definitely blew up that account. And then, I hate to say it, I've never lost a big account. I've never blown one up. I wish I had a better story for you. The only story I guess I could think about, unfortunately, one of my favors, I went home not knowing short 500 shares of Dynatech during the company party up in San Francisco. And the stock was down 10% on Monday, and I made money. And the boss was like, "What the hell are you doing? You're not supposed to take anything home." But no, I've never. I hate to say, I'm really not trying to, be golden boy here. My most memorable trade was when I was trading for the hedge fund. I was living in Jersey. That's where I met my wife. I was driving to the office, and we had a loss limit that you could use per month. It wasn't like, here's so much you could trade. You could lose $100,000 a month. Like for the hedge fund, like that, as a new trader, that was my loss. I remember that I liked this setup so much, I called my buddy who also traded, said, do you want to combine up loss limits and just get the hell after this trade? I feel really good. I wrote up a proposal. I drew it out. Here's the technicals. Here's the fundamentals. I submitted it to the CIO. I mean, we had double the size. We had double our loss limit for the whole month on in this trade. And we were up a bunch of money. And I started moving against this, and I was driving 40 minutes to the office. So I was watching the trade on my handheld. We were getting quotes back then. I was literally ripping through traffic to get to the trade desk to close it down. It was going against us. And by the time I got to the desk, where I was up more money had been up the whole year, it wound up being a manageable loser. I just watched all the profits just go away. So this is just the most memorable trade. I knew it was going to work, but then it came back against me. But no, there's really nothing. I haven't had a significant big blowout. I hate to say, knock on wood, anything can happen.
I think
I screwed up. I screwed up a rebalance on one of my biggest clients in the wealth management, and I had to make it right with them. I paid them basically a year's worth of management fees because I screwed up a rebalance. So maybe that should be mentioned as well.
All right. Well, tell us, Todd.
Sorry, I dodged that one, but I wish I could give you more.
Sean, he's the first one to answer that question this way, right?
I think so. Like a true politician. He didn't say he was for or against it. It's just, but it's all good. Well, listen, Todd, you are so as has been established, you are in Saratoga Springs, New York. For those who don't know where that is in upstate New York. It's straight north of New York City, about 3 hours. Yeah. What does a Wall Street guy like yourself, what do you do after 4 p.m. after the market closes? How do you unwind?
Go coach baseball. No, I'm not a Wall Street guy, man. I mean, listen, I even when I worked in the city, I mean, I would work in our condo in Hoboken. I wouldn't even really go to the office. Like I would just work at home. My wife would go in, take the ferry across, and go have happy hour with all my friends and tell me what happened. So like I'm not a Wall Street guy. I'm very much an entrepreneur and I love the markets. But to unwind, I mean, Saratoga's got a ton of fun bars and restaurants. I got some buddies who like to act like we're 20. So we might go hoot it up every now and then, not lately. Coaching baseball, I coach ski racing in the winter. Trying to get a better golf game together, trying to get single digit handicap, and it's a ways away from that. I mountain bike, I road bike. I love skiing. I ripped my Achilles in Breckenridge, so I'm 3 months after surgery then, and I'm back at it. But try to endure that.
Yeah.
What's that?
Does that bother you? Like you're a pretty active guy, right? And now you get an injury like that, you can't really be working out or riding your bike or doing anything.
It makes me grumpy. I'm cloudy. Right. I'm definitely shorter with everyone, and I'm back. I can move around there pretty good, and I just walked 18 holes this weekend. So 2.5 months after surgery, I walked 18, and I was hurting, but it was good. But I think working out is super key for guys who have high stress jobs like we do. I think exercise is so key. That's why I'm envious. I mean, upstate New York is great, but where you guys are in Colorado and Key West, I mean, that's awesome. That's just great environments to be in, man. And just use your environment to stress release. Yeah. To trade, is so. You've got to make sure that your mind is clear. You get the endorphins going. You get the oxygen going through your mind. Like I live in this neighborhood in Saratoga. It's crazy. Goldman Sachs has a private wealth management arm up here called ACO, and they run like, I don't know, 60, 70 billion dollars. And it's one of their majors. And so like a lot of my buddies like live in upstate New York and make Goldman Sachs money. It's stupid. But the point of that story is like Goldman makes them take off 2 weeks, either every quarter or every other quarter.
So that somebody cannot do their job, right? So
yeah.
Like catch fraud.
Yeah. That right, but fraud, right? But also, I mean, I really think it's just to keep your mind fresh and relax. I mean, maybe it is to just go and check all the crap that you're doing. But
Straza, I think we need to talk to JC. I think you and I need forced 2-week vacations every quarter. I think that sounds wonderful.
This sounds fantastic.
Yeah, we got to talk to JC about this.
I got one more for you, Todd. You seem like a pretty jolly guy. Like it seems to me that you really like what you do, and that emanate from you. Is that fair? Right?
I love it. There's nothing. I consider myself really lucky in that there was never a doubt. I love the markets. I'm blessed to be able to do this, and that's why we work 60 hours so we don't have to work 40. If you know what I mean.
Right. You could spot people like this that feel that way. It's part of the reason why we like you so much, right? You're fun to hang out with. What you do. What keeps you passionate day in and day out about doing the same thing? What keeps you interested and passionate about markets? I
mean, I don't do anything. I think markets are just awesome. It's the biggest, most grand mass psychological experiment. It'll twist the minds of, the most intelligent people and well-financed people. It's such an unbelievable mass game of chess. I just love, again, the highest pedigree people with the best resumes who come on and, on TV and say, here's what's going to happen. And here's matter of fact, here's what's up. And the market's like, oh yeah, hold my beer, watch this. Like the markets have such a sick and twisted sense of humor. It's awesome. You can't help but respect it. It's just constantly a game of monitoring, assessing the collective market emotions, see what they are listening to and they are expecting to happen, see what you can observe, what you see, monitor your own internal emotions, make sure you're under control while you're trying to work and exploit the collective thought that shifted to one side. So it's this constant battle of observing the mass human, sort of everyone herding to one side of the boat and getting on one collective thought, and then and realizing, when do I set myself apart from the crowd and when do I join the crowd? And are they right or are they wrong? And when you're wrong, you really got to course correct and admit that you're wrong pretty quick and jump on board. So I don't know how to summarize that 1 or 2 sentences, but it's just such a cool chess game.
You're in it for the love of the game. I love it.
I could have saved myself a lot. Yeah, love of the game.
Speaking of things you love, you've got a recital to get to in about 15 minutes. We're concerned about your time, so we're going to let you go. But
I
listen,
appreciate
buddy,
it.
yeah, listen, this has been great. It's always great talking to you. Straz and I, whenever we get to New York City, we often get to hang out with you, and it's one of the highlights every time we go up there. And no doubt Straz and I will be back again in the next 6 months or so. So looking forward to hanging with you again. Thanks for doing this, man. Dude, we're lucky to know you. Thank you.
Yeah, I appreciate it, guys. A lot of respect. You guys are awesome. So thank you so much. I appreciate the kind words and the time, and thanks everyone for listening. And can't wait to see you guys soon, man. All the best.
Thanks, Todd.